Hey guys, this is Simon with Trade and Perform Coaching. Doing the trade review for Friday, and we had quite an extraordinary day on Friday. We just nailed the highs and lows. And what I want to show today, so there's a couple of things before we get started. So first of all, the objective is to follow process. The only way to build an account. So the first rule is don't blow up. Second rule is don't draw down outside of a reasonable small number, right? Third rule, high consistency, high win rate, right? And then the last piece is, well, how do you achieve that? That's the question as a trader. How do you achieve a win rate in the 70, 80, 90 percentile, right? Most people will say it can't be done. Most will say it can't be done. I believe it can be done through the majority of the year, right? And so then it comes down to controlling risk, right? Avoiding the risk of ruin and having a plan to structure to increase your trades if you can achieve it. So let's go see how we achieved it. We were able to achieve it really all week long, but particularly how did we achieve it on Friday, right? And how do we set up? And I actually recorded the session in real time live, and I'm going to be able to replay a little bit of that for you here in the video and demonstrate to you. So this is what I'm going to do. I'm going to place the video, the Vimeo video. I'm going to place a link for it under right after I post this video. I'm going to post the second link so that you can actually watch it unfold in real time, right? I want you to watch it unfold in real time so you can see before the trade got there, this is where we were looking for responsive sellers. Before the short, before the long got there, this is where we're looking for responsive buyers and exactly how we handled it. But that whole process took pretty close to an hour and a half, right? So I'm going to see if I can't crush that down into 10 minutes and give you all a good idea. And we do this, I don't want to say every day, but on a pretty consistent daily basis, right? And that's how we're able to grow the accounts and stack wins one over the other. So let's get to it. First of all, let's get the fun disclaimer out of the way. Well, it's this one right here. So you can pause the video if you'd like to see it in more detail, but basically what this says is past performance is not indicative of future results, right? This is for educational purposes only. What I'm discussing here is essentially my trade plan. The goal of the room is to share my trade plan with other traders in the room, and then they make, if they'd like, they take it and they make it their own, right? As far as risk management, execution, entries, and exits, right? This is my plan. I'm sharing my plan with y'all, right? I'm not a registered investment advisor. Please consult your registered investment advisor and your risk trading plan before ever investing or trading any financial instrument. And of course, if you don't know what you're doing, you can lose all your money in trading, which is why the number one rule is don't blow up. Don't give back your money once you've earned it, all right? Get consistent. That's the key. So number one, we're going to come into the day. I want to show you. So first of all, look how the zones worked out, right? But you go, but Simon, how could have you known beforehand? So as you can see, I'm going to draw this in just a little bit here. And you can see we pushed right up into the white zone out of the gate. We had a full rotation down into the white zone. So this rotation is from 2477-ish down to 2471-ish, a 6-point rotation down, followed by a almost 5-point rotation up out of the zone, right? So if you can win at a high rate, you can accelerate the aggressiveness of your sizing, whether that's a conservative sizing or an aggressive sizing. That's up to you as a trader, right? But the fact is, no matter how you stage your sizing, you've got to have a way of increasing that sizing over time. The only way you can do that confidently is by having high win rates. So this is the video. It's already up on Vimeo. You can see the link right up here. I'm going to post this, and then let's expand this here and see if I can't jump through the trade. So here you are, and you see, so I can't manipulate the trade. This is how the members in the room saw it, right? So this is my key location, 2477. And my first goal, so I want to watch how this goes, right? So my first goal is to grab the trade. So you can see a couple of things here. First of all, we gapped up. This blue line's the opening print. This is the gap fill. This is key support. This is key resistance. You'll see they're both marked off. Well, this should have been marked as key location. The white zones are the key location, what we focus on. And then you can see as we move through here, right? So you can see the market's already coming up. And already here, when we open up, I say, my key location is 2477. I adjusted size a bit to compensate for the potential of open drive higher and the chance that I might get stopped, right? So I want you to watch as it pushes up. I already know I'm going to take a trade here, so there's important things. My stop is 2 points behind this zone. That puts my stop at 24.81. I have 4 points of risk from the front, right? I have a limit sitting here at 24.77 where I'm looking for responsive sellers, and I'm looking for a trip down to 24.71. My trade plan calls for me to scale at 2 points, move my stop to break even, and then trail down to 4 points. That's my next scale, and then leave my trailer. And once I've achieved 6 points, either move stop to break even, and or if we get to the next key trade location, cover that trade, flip and get long, right? And again, you can't make this up. This is all in real time and you'll have access to that video. So if you watch, here's where we push up. Now this is where most people get scared. Now I did not get filled on this first punch. I want you to watch it push in, and you'll see that it pushes up the first time and doesn't make it. I don't get that fill. Here's where I have my fill. Obviously I let go. So you can see it's a little tricky operating it this way, but this fill right here, this move one back, I'm going to go back one more time. So on this punch up, you can see the time there, 37 minutes. I didn't get filled here. I do get filled right there on that punch up at 44 minutes, 43 minutes, right? So I am now short, right? I'm looking for responsive sellers. I have my stop 2 points behind the zone. My target is 2 points and 4 points. Now let's watch how much time proceeds to follow. So I need it to roll to 24.75, right? So you can see we're already at 48 minutes, 49 minutes, and there's your 24.79 at 50 minutes in. So I guess it was roughly, let's see, it looks like it was about 15 minutes till I achieved my first scale. My first scale comes off, time to move stop to break even, right? Don't know if the trade's going to go any further at this point. Understand, I'm not predicting where the market's going to go. I've already done my homework the night before and posted up the charts. And now my job is to simply let the odds work out in their favor. And understand, even if I had a 90% win rate, I want everyone to be really, really clear on this. Even if I said, hey, the zones are 90% win rate, right? That means that I have, for every 100 trades, randomly distributed 10 losses, and I don't know where those 10 losses are going to go. Where most traders go off track is they spend all their time and effort trying to avoid those 10 stops, when in reality you should be focusing on just accepting those 10 stops as part of doing business and making sure that you're capturing all the trades so that you get the odds working in your favor and you don't get whipsawed by randomness, right? Because that means those 10 stop losses are randomly distributed. If it's 90%, if it's 80% win rate, 20 losses are randomly distributed. And when I coach people either one-on-one or when we're doing mentoring sessions in the room, I explain, don't worry about the stop. The win rate should be high enough and consistent enough where your focus should be on proper sizing, following process, excellent execution. And for my more advanced traders, there's plenty of trading opportunities to, quote, think about where the setups come from. But in this situation, the white zone, those are our highest odds locations. They're designed, right, not to have to be overthought. They do stop sometimes. There's no question about it. Sometimes they do. But my job's not to figure that out. My job's to figure out where the white zone belongs, share that with the members in the room, and then let them adapt that into their trade plan and not try to avoid the loss. So as we move forward, right, you can see I've already achieved my 2 points. Now, this 72, so from 77, you can see in this bar I've now achieved my 2 points, and I've achieved my 4 points, right? Because 74 was my next. I'm trailing down, and I want to be completely out of my trailer by 71. Now, we made a special adjustment. You'll see here that NQ opened into the white zone, right? Held the white zone, pushed out. This was the second test. And so, remember, my biggest size and my highest amount of leverage is in ES. What's the reason for that? Well, you have the most institutional participation, right? That puts my odds at a clean and clear. That puts my odds of getting institutional help so that the market just doesn't melt on me is much higher in ES than it is in NQ. And you'll get a lot more volatility in NQ than you will in ES. And for high leverage, I actually want a little bit lower volatility. So I trade a smaller size in NQ than I do in ES, right? So the next thing that you'll see happen here, so now I'm preparing. I've already got my 2 and 4. I've moved my trailers down, right? I'm getting ready to cover the balance of this trade, and I'm getting ready to get long. So I make an adjustment because the NQ has obviously expanded its range to the downside here, and Globex low landed at 24.67 3/4, which I thought was a little bit of an odd place for them to land Globex low, but it's summertime and it's August, and so you have fewer participants both in the day session and in overnight, and you end up getting Globex low landing which is the European and Asian sessions, and landing in a little bit unusual place, but I had to anticipate it. So I now want my stop 1 point behind Globex low, which would have put my stop at 24.66 3/4. I really want to contain my maximum stop to 4 points if at all possible, right? So remember, on the second scale, I'm achieving a 1-to-1 risk reward here. And so instead of taking the front of the white zone, now usually it's a cardinal rule for me, I take the front of the white zone, and I'll tell you now that trade worked out just fine, but the adjustment for me was to move about 2 ticks in front of Thursday's volume point of control. Again, you'll be able to see in this video, we did this all in real time. So we're rolling down, we're waiting patiently. Okay, you can see now we're an hour and 2 minutes into the market, so it's approximately 9:30 Central, 10:30 Eastern. Rolling in, we've now hit the front of the zone, so you're definitely filled if you were 24.71. Again, I was pulled back here to 24.70 even, and I want to pause and talk about that for a second. So I have a little consternation. I'm off plan a little bit here by doing this. I had to come to a compromise between my stop and my entry. I prefer to simply take the front of the zone. That's what I do 9 out of 10 times. This was the exception because of the adjustment to the stop that I had to make. Risk had to be a consideration in the trade. So as we're pushing in, let's see if we can get I hope I didn't stop the video. Oh wait, there we go. So let's push back a little bit. So you can see right here, there we go, an hour and 6 minutes into the day. So here's an hour and 3 minutes. There's my fill right there. So I'm literally filled on this bar. We pushed to 24.69.50 even. I'm now long again. Remember, I already have this long planned out when I'm over here at 24.73. And you'll notice, out of interest, that there is no zone at 24.73, and that's because that was a weak location. Okay, so we distinguish between locations where retail traders want to trade, and they'll use things like swing highs, swing lows, prior days high, prior days low, gap fill. Those are all weak locations. They come closer to about 50-60% win rates, and as a day trader, a leveraged day trader, it's not enough. You got to know where the institutions are going to step in. Okay, here we go, we're long. Now remember, so since I'm not long from 24.71, my target's now 24.72 for my first scale, followed by 24.74. Okay, so for those that were long from the front of the zone, and I don't think that anyone was, if you listen to the video, it was really clear. My plan called for me to be long at 24.70. So here comes our first. So this is our 24.72. High traded ask 24.72 1/4. We're now scaled 2 points, right? And I think I actually scaled 1 tick in front of that. I adjusted when we hesitated there. And then you'll notice as we push forward, we're going to look to see how long it takes us to the 24.74. And this did tick up to 24.74. I stopped at 24.73.50, the video. So that is essentially in real time, right? Showing the recording. We did not take the short on NQ, and we were counting on a couple things. First of all, it's summertime. After the first hour or two, the market's gone straight to summertime. Secondly, we've just bagged essentially 8 points on our trailers and 4 points on our primary position from 2 key locations, taking almost no heat, right? And you can see that in real time. And so all of this started in a process, right? We started with the market preview. We went in, we had a plan before the market ever opened. We're not nervous. We're not trying to analyze little volume flows. We're not getting agitated. Very, very calm, direct attack of our trade plan, right? We had our trade plan. We're attacking that trade plan for precise execution, good risk management, right? And if you'll go through and look at the, and I want to show you something. So I want to pause here. I'm going to pull this off, right? See if I can do this here real quick. So let me draw this in. There we go. So if you look, now I'm going to see if I haven't messed up my charts from when I adjusted them. And I want to pull these up real quick. So this is 0804. So the fourth was, so let's go to 0803. This is Thursday's chart. Okay. I want to show the accuracy of how these zones work, right? So this is Wednesday. Okay, so the yellow zones have slightly lower odds than the white zone. So you'll notice we open up, push into the white zone, reject, come right down to the yellow zone, which is the second highest odds location, push back up, right up to the white zone, right back to the yellow zone. We played ping pong all day. Excellent opportunity through the course of the day. We open, and again, this is on NQ, Euro, the bonds, so on and so forth. The white zones really play a key location through the week. If I go through 0802, open, see if I can pull this up, and I go back to the second. Let's squeeze this down really quick. There we are. Let's just magnify this. Okay, so you will see here on, again, I don't move these around. Again, I do not think this is a white zone. This is for example purposes only. There was not a zone here. This got saved after I manipulated it. So the white zone was the only key location. I want to point out a couple of things here, right? Notice right out of the gate, when you stretch this out, right off the open, we open above the white zone, tag in, it was good for 2 points. The market then rolls back in all the way back to the white zone, pushes up again. Now notice, even if you had taken this white zone, you did achieve 2 points, you did not achieve 4 points. So if you took the white zone right here, you achieved your 2 points, stopped to break even, and you're out. There was really not a second dip in here. I would consider this all one move into the location. The zone finally gives up. I did not have a key location down here at 2463. You'll notice again the areas where locals are trading. This was Tuesday's low, this was Monday's low. These areas are getting stopped out. We're trying to eliminate places where retail traders are trying to capture their trades and focus on where institutional traders are taking their trade. And you'll notice we push all the way back up to the white zone. White zone's here. Now, did the white zone give a 2-point rejection out of this area? Well, it did and it didn't is the answer to the question. Your stop is 2 points behind the zone. You'll notice that it pushed in. It was really hard to get filled here. I would go almost impossible to get filled at 24.71 3/4. There was no trade that got pulled off here, and we entered the zone in the last hour and a half of the day finally. But you'll notice the white zone held the market from pushing up all afternoon, was never able to push behind. And if you'll look in the Asian session after the close, it never stopped you out. It would have had to push to 24.75 3/4, never got there, and it did rotate down for a 4-point rotation in Asian session, although I do not trade that. That's not part of my trade plan. The point is the white zone definitely gave you key location both for your long in the morning and for potential short in the afternoon. It doesn't always result in a 2 and a 4-point trade, but it almost always results in a beautiful pause. Almost always results in a beautiful pause. There are some stops. I want to emphasize that, right? Because they're not magic. The market can trade through them, right? And that's built into the trade plan for the risk management. Anyways, my name is Simon. I've gone on way longer than I have. Pretty much all our days look like some version of this where we trade into key locations. You can see even going back to the middle of last week, this location up here was a key target for a short first time in and key long from above, depending on which way we came at it from the overnight session. And so you can see that we had this laid in all through the week that we were planning to take a short through here. And it's much the same when you look at our charts. When we go to the, let me see where I have this hidden. There we are. When you look at the rest of our charts in Euro, US 30-year note, so on and so forth, you'll see here's the Euro. Big rotation down right into the white zone. Key rotation out. Rotation into the white zone first time in. A little bit of an overshoot. another rotation up to retest the yellow zone. Even the yellow zone in the early Asia worked quite nicely, right? This is the crude oil, and you can see again our first push into the white zone created rejections both from above and from below, and then the push right up, we never quite made it to, actually this has been manipulated, I apologize, I double saved it. This is these were key location. This was a key location coming in Friday. I've already changed the chart for Monday is what I'm trying to say, and it's saved. Didn't mean to do that, and so we'll just jump over to the 30-year note. And the 30-year note, you can see we rotated down, and even under heavy economic data, look how beautifully we came into the white zone. This is a fat trade right here from 25 to 29. This is over $500 a contract in this move. Really, really beautiful trade. We have a gentleman who trades TLT, and he had an over. His trade in TLT yielded over 150% return on his bond trade from Friday using options. So lots of people. I don't trade options, but lots of different ways to use the zones to give you key location and make lots of money. Anyways, if I want to leave y'all with any message, it actually isn't the white zone. What I want to leave you with the message is don't draw down. Have a trade plan. Practice executing that trade plan at a high level, which is much harder to do than you would think, right? And then finally, have a plan for increasing your trade size over time as your profits justify increasing that trade size. Maintain a high level of integrity on where you put your zones, where you get your trades from, so that you maintain a high win rate, right? And then grow that account over time. If you'll stay process driven, you can pull as much money as you want out of that market over time. I've seen it happen time and time again. Anyways, my name is Simon with Trade and Perform Coaching. If you'd like to come visit us for a week, I offer a 5-day free trial. Email me at tradeandperform@gmail.com or send me a message on Twitter or StockTwits. More than happy to have you in the room. Thank you for joining me. I hope everyone's having a great weekend. We'll talk to you soon.